In the previous lectures, in the previous 2 or 3 lectures, we have completed class 1. We are discussing first section 28, charging section 28. So in the previous lectures, we have completed this section 28 class 1 relating to profits and gains of business or profession. Now we'll focus on class 2. So class 2, section 28 class 2, section 28 class 2. There is no subsections at all in this section. Section 28 class 2. So within the section 28 class 2, there are 5 items has been covered. Within the section 28 class 2, 5 items has been covered to ensure that as far as possible the presentation is in line with the Income Tax Act. To ensure that as far as possible the presentation is in line with the Income Tax Act, I have used the same points. Look at this: A, B, C, and you'll get E. A, B, C, and you'll get E. Sir, why E? Because D is separate. The Income Tax Act, this is A, this is B, this is C, this is D. That is the point. So therefore, if I put D here, my presentation and Income Tax Act presentation may be conflicting. You may be confusing. So therefore, in order to ensure that the presentation is consistent with the Income Tax Act, I have used this point: A, B, C, and E. Four are similar. A, B, C, E, and 4 are similar. Whereas D is separate. Okay. Therefore, we'll discuss now section 22 class 2. Section 28 class 2. Section 28 class 2. First, within this section 28 class 2, first we'll cover these 2 points, A and B. First we'll cover these 2 points. What is section 28 class 2A? Okay. What is section 28 class 2A? I'll show you. Okay. What we are discussing now? We are discussing 28. Section 28 class 2A. Section 28 class 2A. Okay, section 28 class 2A. This is what we are discussing. I hope it's better to take 18. Better I'll take 18 so that the font size will be visible for you. Font size will be visible for you. Okay. Font size will be visible for you. Okay, section 28 class 2 and A. We are discussing section 28 class 2 and A. So here, what is the job of the assessee? Job of the assessee is managing the affairs of a company, managing the affairs of an Indian company. Okay, right. What is the job of the assessee? What is the job of the assessee? For your understanding, I'll put in a tabular format. Assessee's role or job. Assessee's role or job or function. Okay, assessee's work. I should say assessee work. Okay, I should say assessee work. Okay. Assessee work. What is the assessee work? So what is the work of the assessee? What is the work of the assessee? In section 2 class 22A, what is the assessee's work? Assessee's work is managing the affairs of an Indian company. 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 As what the assessee is doing, assessee is managing the affairs of an Indian company. Okay, assessee is managing the affairs of an Indian company. How much work the assessee is doing? Assessee, how much is the assessee's work? How much work? How much work? How much work? What work assessee is doing? Assessee is managing the affairs of an Indian company. Assessee is managing the affairs of an Indian company. Okay, he's not an employee. He's a manager. He's a manager managing the affairs of an Indian company. How much? How much the assessee is managing? Assessee is managing the whole or substantially the whole. Whole or substantially the whole. Whole of affairs of the company. Substantially whole or substantially whole. Whole of the affairs. Whole or substantially whole of the affairs. Whole means what? All work. All affairs. Whole means all affairs. Whole means all affairs. Entire affairs. Whole means all affairs. Substantially whole means what? Substantially whole means what? Almost all affairs. Almost all affairs. Substantially whole means almost all. Whole affairs. Substantially whole means almost all. Almost all. Okay, whole affairs means all affairs of a company are substantially all affairs. So that means so either he was in charge of the entire affairs of the company or substantially the whole. That means almost all. There is no difference. 1 or 2% work is given to others, but almost 90% work is done by this person only. Almost 90% work is done by this person only. Maybe some part of the work, minor work is given to others. Substantially whole means almost all the affairs of the company. Okay, who is an associate? Managing the affairs of a company. Managing the affairs of a company. I should say company. Managing the affairs of a company. How much work the associate is doing? Whole or substantially the whole of the affairs. Okay, right. So who is associate? Service receiver. To whom the associate is working? To whom the associate is working? Okay, to whom the associate is working? To whom the associate is working? Okay, to whom the associate is working? Associate is working for an Indian company. Okay, associate is managing the affairs of an Indian company. So Indian company. To whom the associate is working? Indian company. Or the service receiver. Service receiver. Associate is the service provider. Our associate is the service provider. Okay, associate is doing work. He is the service provider. To whom he was rendering the service? He was rendering service to the Indian company. That means service receiver is an Indian company. Service receiver is an Indian company. The first class. Okay, management of whole or substantially the whole of the affairs of an Indian company. Management of whole. So how much work we are doing? Management of whole or substantially the whole. Okay, how much work we are doing? What we are doing? Managing the affairs of which company? Indian company. Okay, right. Next, taxability criteria. Okay, taxability criteria. So what is the condition required to be satisfied to tax? What is the condition required to be satisfied so that we can tax this income? What is the condition required to be satisfied so that we can tax this income? Okay, the required condition is that there are two criteria: timing of receipt and purpose of receipt. Timing of receipt and purpose of receipt. Okay, criteria for taxation. Criteria for taxation. Criteria for taxation. Criteria for taxation. So for when this income will be taxed, 2 points. One is timing of receipt and purpose of receipt. Look at this. At or in connection with the, at means timing. In connection with the means purpose. This is timing one. Timing of receiving the income. This is in connection with the, in connection with means purpose. Purpose of receiving the income. Time, that is timing of income in connection with means purpose. Purpose. 2 points we have to check. One is timing, another one is purpose. So first point we have to check is timing. Second point we have to check is the purpose. So timing of receipt of compensation and purpose of receipt of compensation. Okay. So far as the timing is concerned. Okay. Timing. Okay. Timing, purpose. So timing, purpose. Okay. Timing, purpose. So timing of compensation at the time of termination of the agreement. At the time of termination of the agreement. At the time of termination of the agreement. Or at the time of modification of the agreement. At the time of modification of the agreement. Okay. At the time of termination or at the time of modification. This is what the point. Or purpose. Okay. What is the purpose? Same. Relating to termination of the agreement. Relating to termination of the agreement. Okay, or relating to modification of the agreement. Relating to modification of the agreement. Okay, at the time of termination or at the time of modification, or relating to termination or relating to modification. Okay, this is what the point. At or in connection with the termination or modification. At or in connection with the termination or modification. Here the important point is that if the timing criteria is satisfied, then the income tax department is safe. Burden is on the assessee. Then the burden is on the assessee. If the timing criteria is not satisfied, then burden is on the income tax department. So in this point, assessee's burden. It is the burden of assessee to prove this. It is the burden of the income tax department to prove it. Okay, that means I'll tell you. So even though it appears that the point is both are taxable, all four are taxable. But in case of disputes, who has to prove? In case of disputes, who has to prove? That is the important point. In case of disputes, who has to prove? Okay, right. So if the timing, if any compensation is received by the assessee at the time of termination or at the time of modification, then the court or the law presumes that that compensation is related to the termination only. Purpose is satisfied. That means if timing is satisfied, purpose is assumed by the law. If the timing is satisfied, actual case, if the facts of the case, timing condition is satisfied, purpose condition is presumed. Okay. So purpose condition is presumed. That I am going to write. Okay. Right. So if compensation is received by the assessee at the time of termination of the agreement, okay. If compensation is received at the time of termination, or modification, or at the time of termination or modification, then the law presumes that such compensation such compensation is relating to such termination, is relating to such termination only, such termination or modification. If at all such compensation is not, if at all such compensation is not relating to termination, if at all such compensation is not relating to termination or modification, if at all such compensation is not relating to termination or modification, okay. So if the timing of payment is at the time of termination or modification, if compensation is received at the time of termination or modification, then the law presumes that that compensation is relating to such termination or modification. If at all such compensation is not relating to such termination or modification, then the burden lies on the assessee. Then the burden lies on the assessee. Then the burden lies on the assessee to prove that such compensation is not relating to termination or modification. Okay, that means if timing is satisfied, purpose is presumed, assessee has to provide contrary evidence. Assessee has to provide contrary evidence to escape from this section. Emma, do you understand this point? If the timing is satisfied, okay, if timing is satisfied, purpose is presumed. If timing is satisfied, why I am explaining means because normally people will confuse by using this word called as or. By using this word called as or, people will confuse either timing is satisfied, also purpose is satisfied. Even if one is satisfied, it is taxable. No, that is not like that. It is an income tax act. It is an income tax act. It is not that everybody who knows basic English can read this and can read and understand this act. No, it is not so easy to understand. Everyone who knows English cannot understand the income tax act. Anyone who knows the English can say or means either of the one condition. No, not like that. Okay, that's why I'm explaining. People may confuse. Okay, timing is satisfied, purpose is satisfied. Okay, then it is okay. No. It's not that alternative conditions. Timing should be satisfied, purpose also should be satisfied. Just because compensation is paid at the time of termination, we can't say that it is taxable. Even though timing is satisfied, purpose should also be satisfied. But the purpose, law presumes that purpose. If that purpose is not satisfied, you have to prove. Okay, law presumes that if the timing is satisfied, the law presumes that purpose is also satisfied. If the purpose is not satisfied, assessee has to prove. But the timing and purpose both has to satisfy. That is the important part. If timing is satisfied, law presumes the purpose. If timing is satisfied, law presumes the purpose. Okay, then and also given an option. And assessee has an option. An assessee can prove that purpose is not satisfied. Assessee can prove that purpose is satisfied. Assessee has a right. To prove that purpose is not satisfied. That means this presumption. Law presumes that. The presumption taken by the law is a rebuttable presumption. That means the presumption taken by law. Is a rebuttable presumption. Okay. The assessee has a right to prove that purpose is not satisfied. The presumption taken by law. Okay, the presumption taken by law is a rebuttable presumption. That means assessee has an option to rebut that presumption. Assessee has an option to prove that the assumption taken by the law is not correct. Yes, I have the freedom. I am the assessee. No doubt. I have received the compensation at the time of termination. But that compensation is not related to termination. Earlier I have rendered some services. Earlier I have sold some goods. That compensation is related to that, not related to the termination. I can prove it. Normally, by common sense, court is assuming that if the compensation is paid at the time of termination, court is assuming that it is related to the purpose of termination. But if at all it is not related to the purpose of termination, I have to prove. టర్మినేషన్ అప్పుడు పేమెంట్ చేస్తే ఆటోమేటిక్ గా అది టర్మినేషన్ కి సంబంధించింది అని లా అసంప్షన్ తీసుకుంటున్నారు. ఓకే, టర్మినేషన్ అప్పుడు పే చేసిన అమౌంట్ టర్మినేషన్ కి సంబంధించింది అని లా అనుకుంటున్నారు. కానీ టర్మినేషన్ అప్పుడు పే చేసిన అది టర్మినేషన్ కి సంబంధించింది కాదని మనం ప్రూవ్ చేయొచ్చు. అర్థమైందా? టర్మినేషన్ అప్పుడు పే చేశారు కాబట్టి ఆటోమేటిక్ గా ట్యాక్సబుల్ అనేది బ్లండర్ అసంప్షన్. చాలా మందికి తెలీదు. యాక్ట్ డ్రాఫ్ట్ చేసినప్పుడు దాని బిహైండ్ ఇంటెన్షన్ ఏముంటుంది, అది ఎలా చదవాలి అని. ప్లెయిన్ గా ఇంగ్లీష్ చదివినట్టు చదవకూడదు. లాని ప్లెయిన్ గా ఇంగ్లీష్ చదివినట్టు చదవకూడదు. అలా అయితే ప్రతి ఒక్కరు ఇన్కమ్ ట్యాక్స్ ఎక్స్పర్ట్స్ అయిపోతారు. దట్ ఇస్ నాట్ కరెక్ట్. అక్కడ లేనిది మీకు అర్థం అవ్వాలి, ఓవరాల్ పిక్చర్ అర్థం అవ్వాలి. ఓకే, కమ్యూనికేషన్ అంటే ఏంటి? So you have to understand what is not said. You have to understand what is not said. అక్కడ చెప్పండి ఏదో మీరు చదవగలగాలి, అదే స్కిల్ అంటే. ఓకే, సో కాబట్టి ఇక్కడ టైమింగ్ సాటిస్ఫై అయింది, కానీ పర్పస్ ప్రిజంప్షన్ తీసుకున్నారు. అది అవుట్ ఆఫ్ ఎక్స్పీరియన్స్ తెలుస్తుంది, అంతేగాని అక్కడ ఇంగ్లీష్ చదివితే రాదు. ఓకే, సో ద టైమింగ్ ఈజ్ సాటిస్ఫైడ్, ద టైమింగ్ ఈజ్ సాటిస్ఫైడ్, పర్పస్ ఈజ్ ఆల్సో ప్రిజ్యూమ్డ్. Court presumes the assumption, but you can prove that the court presumption is wrong. We can prove that the court presumption is wrong. Okay, I hope once again you can read this point, ma. If compensation is received at the time of termination or modification, then the law presumes that such compensation is relating to termination or modification. If at all such compensation is not relating to termination or modification, then the burden lies on the associate to prove that such compensation is not relating. Okay, and to escape from that, to escape from section 2 clause 20. This is what the point. If the timing is satisfied, purpose is presumed, you have to reboot the purpose. Okay, right? Therefore the burden lies on the assessee. Burden lies on the assessee. Okay, if the compensation is not paid at the time of termination of the agreement, okay, if the compensation is not paid at the termination of the agreement, if the compensation is not paid at the time of compensation is not paid at the time of termination of agreement, it is paid before or after that. It is compensation, but compensation is paid, but compensation is paid before termination or after termination, before termination or modification, before termination or modification, or after termination of modification, then after termination or modification, or then the law presumes that such compensation is not relating to termination or modification. Then such compensation is not relating to termination or modification. Okay, now the if at all, so now the burden lies on the income tax department. Now the burden lies on the income tax department. Now the burden lies on the income tax department to prove that such compensation, though not paid at the time of termination or modification, but indeed it is related to termination or modification. This is what the point. So here the burden lies on the income tax department to prove the purpose. Okay, if the timing condition is satisfied, law presumes the purpose. Assessee's burden is to disprove the purpose. Dispresume the purpose. If the timing condition is not satisfied, law presumes that purpose is also not satisfied, then the burden lies on the department to prove. Okay, timing satisfied, law presumes. That means what here? Okay, that means what here? Timing not satisfied, law presumes that purpose is also not satisfied. Law, okay, but department can prove the purpose. Department can prove the purpose. Okay, right? Timing is satisfied, purpose is presumed, purpose can be disproved. Timing is not satisfied, purpose is not presumed, purpose can be proved. Okay, these are the 2 points. At or in connection with the termination of the agreement. This is how we have to read. Okay, అది ప్లైన్ గా మనం చదివినంత ఈజీ కాదు. చూడండి, జస్ట్ సినారియో 2 ఏంటి? టైమింగ్ ఈస్ ప్రూవ్డ్. Okay, timing is proved. Okay, timing is satisfied, purpose is presumed. Timing is satisfied, purpose is presumed. Purpose is presumed by law. Facts of the case, timing is presumed. Law presume the purpose. A burden of proof, assessing. Okay, insert the columns left. Okay, facts of the case, timing is proved. Law, facts of the case, timing is proved. Law presume the purpose. Burden, law presume the purpose. Purpose is presumed by law. Okay, timing is satisfied. Assessee has to prove. Assessee has the burden to prove that presumption taken by law is not correct. Okay, assessee has to prove that presumption taken by law is not correct. Correct. Timing is not satisfied. Burden. Next, facts of the case. Timing is not satisfied. timing is not satisfied. Law does not presume that purpose is not satisfied. Presumes that purpose is not satisfied. Purpose is not satisfied. Purpose is not satisfied. Okay, department has the burden to prove that department has the burden to prove that purpose is also satisfied. Purpose is satisfied. Purpose is satisfied. So therefore here the concept is that timing and purpose both are satisfied, taxable. Timing is not satisfied but purpose is satisfied, that's covered. Therefore the conclusion is that this is the most difficult point here, not a plain reading. Therefore conclusion is that timing and purpose both are satisfied, then taxable. Okay, timing and purpose both are satisfied. Timing and purpose both are satisfied. Okay, covered under section 28 class 2A. Okay, ARP. Timing and purpose both are satisfied. Okay, timing is satisfied, but purpose is not satisfied. Not covered. Okay, timing is not satisfied, but purpose is satisfied. Whether presumption or proving. Satisfied means whether it is by presumption or proof. Whether court presumed or you proved, that condition has to be satisfied. Satisfied may be in the form of presumption or in the form of proof. Satisfaction may be in the form of presumption or in the form of proof. Either court presumes or you prove. Okay, timing is satisfied, not satisfied, but purpose is satisfied, covered under section 28 class 2. This is what the point. It is not the timing or purpose, it is not timing and purpose. So therefore, though it appears like or, it is not that anyone. Sometimes it is both, sometimes the important point is purpose. Okay, right, important point is purpose. This is what the point. The compensation is not paid at the time of termination or modification, but compensation is paid before or after that, then the law presumes that such compensation is not related to termination or modification. Now the burden lies on the department to prove that such compensation, though not paid, but indeed it is related to the termination or modification. Okay, so this is how we have to understand this provision. As I told you, simply remembering the depreciation rates and all important provisions, the repeated questions in the examination, not sufficient. As a chartered accountant, you should have this much of deep knowledge on the Income Tax Act, because it is our core subject. These three subjects, accounts, auditing and taxation, you are supposed to have a depth knowledge, not a basic knowledge. I'm not talking about the other subjects. These three subjects, accounts, auditing and taxation. These three subjects, you are supposed to have a depth knowledge, in-depth knowledge. It is our core bread and butter. This is our core bread and butter. Okay, right. So you can take the screenshot. Of this, or take photo in the mobile and write. You can take the photo in the mobile and write. So section 22 class A, compensation received. Okay, this is what the point, 22 class A. Right, next 22 class 2A. Okay, 22 class 2A. So assessee's work is managing the affairs of a company. How much work assessee is doing? Assessee is managing the whole or affair, substantially whole. Even if one condition is not satisfied, it is gone. Okay, criteria for taxation, either timing or purpose. Okay, right. Now 28.2, we'll see 28.2B. 28.2B, same concept, but affairs of any other company in India. Same concept. Assessee's work is managing the affairs of a company. How much work? Same, but the assessee client is any company. Place of work is in India. Company is any company, but place of work is in India. Okay, Indian company. Look at this point. Affairs of any company in India. Managing the affairs of any company in India. Okay, so in the 2B, the only point is that in case of Indian company, we'll put any other company, but the place of work is in India. Okay, right. From place of work, from where the assessee is working may be different. Okay, insert rows below. To whom the assessee is working, where the assessee is working. I'll write where the assessee is working. Anywhere in the world. So where the assessee is working, anywhere in the world, not an issue. Anywhere in the world assessee is working. Okay, anywhere in the world assessee is working. This is what the point, anywhere in the world, place of working anywhere in the world. But 28.2B, I'll copy the same thing. The only point is we have to change it. Same place of work. to whom the assessee is working, any company to whom the assessee is working, service receiver, any company where the assessee is working in India, where the assessee is working in India, okay, where the assessee is working in India. That is what the point. So two differences: Indian company, any other company in India, Indian company, any other company in India, Indian company and any other company in India. Okay, right. So this is how we have to read the connection, termination or modification. But the important point I need to stress upon here is, so far as this word is concerned, managing the whole or substantially the whole of the affairs of a company, I suggest you to read the definitions of manager and managing director as given in the Companies Act 2013. Okay, I suggest you to read the definitions of manager and managing director as given in the Companies Act 2013. As per the Companies Act 2013, I'll show you. As per the Companies Act 2013, as per the Companies Act 2013, I'll show you the difference between manager and managing director. It was there. Look at this. Managing director is a person who is having substantial powers. This is where I am asking you to students, don't confuse by this word called as substantial. Don't confuse by this word called as substantial. Here in the law, what we have used is substantially the whole. So don't stop your interpretation here itself. Substantially, the mistake done by the students is looking at this substantially. They will forget this. Substantially whole. If you read the Income Tax Act very fast, if you read only substantial word, you are gone. Substantially whole. This you have to combine, read it with combining. The word substantially has to be read in combination with the word whole. The word substantially has to be read in combination with the word whole. Substantially అనే వర్డ్ మీద మాత్రమే కాన్సంట్రేట్ చేయొద్దు. ఆ సబ్స్టాన్షియల్లీ అనే వర్డ్ ని హోల్ అనే వర్డ్ తోటి కంబైన్ చేసి చదవాలి. సబ్స్టాన్షియల్ అనే వర్డ్ ని సెపరేట్ గా చదవకూడదు, అప్పుడు రాంగ్ కన్క్లూజన్ వస్తుంది. సబ్స్టాన్షియల్లీ ద హోల్. ఓకే, రైట్. సో మేనేజింగ్ డైరెక్టర్ హ్యాస్ సబ్స్టాన్షియల్ పవర్స్, whereas manager has substantial or whole of the powers of the management. Okay, whole powers are substantially the whole of the powers. Whole powers are substantially the whole. Whole powers are substantially the whole of the powers. Are substantially the whole. Okay, whole powers are substantially the whole powers. Managing director has whole powers are substantially the whole powers. Therefore, what I can say is that this provision is applicable to a manager as per the Companies Act, not the managing director. By looking at the word managing the affairs of a company, people may equate it with the managing director. No, we are talking about the manager, not managing director. Okay, managing director manages only some work, whereas manager manages the whole work. Manager's work is more extensive than the managing director's work. Manager's work is more extensive than the managing director's work. So therefore, I suggest you to read the definition of manager and managing director as per the Companies Act. As per the Companies Act, read the definition of manager and managing director. Now you'll get some clarity that this is relating to manager, not related to the managing director. Because managing director manages only some of the affairs. What the provision says is substantially the whole. Don't read only substantially. Read the word substantially the whole. Substantially the whole. That means we are talking about a person called as manager. We are talking about a manager. Okay, right. That is what this point 28.2. We are talking about a manager. Next, 28.2c, any agency in India or for any part of the activities related to the business of any other person. Okay, agencies in India. I am an agent in India. I am working for any person. Principal may be anywhere in the world. Agent is working in India. The agent's income is taxable in India. As simple as that. If I am an agent in India for a foreign person, then obviously I am working in India. Therefore, I have to pay tax in India. Okay, agency in India, any other person. That other person may be Indian or foreigner. This other person may be resident or non-resident. It is irrelevant whether the work is in India or not. Agency in India, that means the organization has a presence in India. The agency organization has a presence in India. Maybe agent is also resident outside India. He was doing remote work. Here he established one branch. One premises he has taken on rent. He has recruited the employees. He was monitoring the work from there. Agent is monitoring the firm. Principal is also abroad, agent is also abroad, but agent employees are working in India. Agent has an establishment in India. Therefore, agency in India, not principal, not agent, agency. Agency in India. That is important point. We are not talking about the principal, we are not talking about the agent, we are talking about the agency. Agency in India. So agent also may be resident outside India. Principal also may be resident outside India. Whether the agency work is done in India or not. Whether the agency work is done in India or not. Okay, right. Any contract relating to his business, any contract, any business related contract, any business related contract. So here any contract means this contract may be relating to the P&L items, or that contract may be related to the balance sheet items. Okay, this contract may be revenue contract or a contract related to capital asset. Maybe revenue contract, or maybe balance sheet, maybe capital contract, maybe revenue contract or capital contract. Okay, so that means it may be related to profit and loss account item, or it may be related to P&L item. Okay, I have entered into a contract with Mr. B for purchase of raw material. That is a P&L item. Purchase of raw material is a P&L item, revenue item, but that contract is cancelled, or that contract is terminated. I need to get some compensation. The contract is relating to the raw material, P&L item, revenue item. The contract is terminated. It comes under the business head. No, that contract is related to plant and machinery. I have entered into a contract with somebody else to purchase the plant and machinery. That contract is cancelled. Now I am claiming the compensation. That is a balance sheet item, capital contract. But both are taxable here only. Okay, whether the contract is related to revenue items or whether the contract is related to capital items, it is irrelevant. Any contract related to the business. Okay, whether a contract is related to the P&L items or whether a contract is related to the balance sheet items, it is irrelevant. Okay, it is irrelevant. It is taxable. It is taxable. Look at this provision. Look at the provision. Whether a contract is related to revenue items or whether a contract is related to profit and loss account items, both are taxable. Any contract. 42, if you look at this 42 footnotes, it was inserted by the Finance Act 2018. Earlier it was not there. Now the Act has inserted. Finance Act has inserted 2018, and they said that it is transaction. Every transaction is taxable. Okay. Now the Finance Act says yes, it is taxable. Any contract, even though it is related to capital contract, even though it is related to capital items, whether it is related to revenue items or whether it is related to capital items, now the Act has been introduced. Before introducing this point, there are many case laws which says that if the contract is related to capital item, that is plant and machinery or furniture, etc., then it is not taxable. It is a capital receipt. Judgments, court judgments before inserting this provision. The court judgment says that this contract is related to capital contract, balance sheet items, therefore not taxable. But by including this point here, by whatever name called, any person by whatever act or in connection the termination or modification of any contract related to the business, whether it is a revenue item or whether it is a capital item, okay, any contract is taxable, right? Next, any compensation or other payment due to or received by any person for vesting in government, the management of any property or business. Okay, what is happening here? Vesting. What is meant by vesting? Handing over. Vesting means handing over. Or giving control of. Over what? Okay, vesting. Relating to over. Control over what? Handing over property or business. Handing over control. By whom? Any person. To whom we are giving? To government. Okay, so I am giving control over my property to the government. Okay, I am giving control over my property to the government. Okay, maybe compulsory acquisition. Okay, I am giving control over my property or business. I am managing this property. Now I am giving control over the property to the government. Sir, you manage that property. For the time being, for 2 years or 3 years, maybe for various reasons, you manage the property. Our government is taking voluntarily. Our government is taking by compulsion. Okay, therefore I am having some property. Assessee is having some property or business. Now the assessee is handing over that property or business to the government For that, government is paying compensation. That compensation is chargeable under that business income. Okay, that compensation is chargeable under the business income. Don't say that, sir, sale of business is a capital transaction. No, it's a revenue transaction. I'm not selling. I'm not selling. Temporarily, I'm handing over the control. Temporarily, I'm handing over the control. You understand, ma? Assessee is having some property or business. Now, assessee is handing over that property or business to the government. In return, government is paying some compensation to the assessee. Now, that compensation is taxable as business income of the assessee. What is the first point? What is the first point? Assessee is having some property or business. Assessee is having some property or business. Now, the assessee is handing over. Now the assessee is handing over such property or business to the government. Government is paying compensation. Government is paying compensation to the assessee. Government is paying compensation to the assessee. Such compensation, okay, such compensation is taxable to the assessee. Is taxable under the head business income. Is taxable under the head business income. Okay, taxable under the head business income. As simple as that. Assessee is having some property or business. Now the assessee is handing over such property or business to the government. Government is paying compensation to the assessee. Such compensation is taxable under the head business income. Therefore, vesting means handing over. What we are handing over? Control over the property or business. Vesting means handing over or giving control. Control over what? Handing over what? I am handing over the property or business. To whom I am handing over? What I am doing is handing over. Okay, what I am doing is handing over. Okay, what I am handing over is property or business. To whom I am handing over is God. Okay, so that compensation is also taxable under that business income. Even though it appears like a capital transaction, but it is taxable as a business income. That's why we told in this point, capital receipts are not generally charged. Generally, capital receipts are not charged under this head. But these two may be including capital receipts also. Capital receipts or revenue receipts, both are taxable. Under these two headings, if you observe, even capital receipts are also taxable. That's why there we have used the word generally. As a general rule, capital receipts are not taxed under business income. As a general rule, capital goods are not taxed under business income. But these two are the exceptions, where the capital receipts are also taxable under the head business income. Okay, that's it. That is the point. Okay, you can take a note of these points. I think earlier also I have given the time to take the screenshot. Okay, just break the provision and read it. Okay, so in the next class we'll start section 28, class 3. Okay.